Boy, oh boy, it's already that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Wednesday evening, August 17th, 2016. Cruising our way through this third week of the month of August. Today's session started with some quite narrow ranges, but the inventory report, the FOMC meeting minutes, boy, they got things moving in the second half of today's session and will likely give us some great trading opportunities going into tomorrow. All four, crude, S&P, gold, and euro, all four of these markets are bullish this evening, which is quite rare, but with the markets reacting to multiple news reports today, we know that anything is possible, and we will be ready in Thursday's session. I have another fantastic newsletter for you guys. Got some great strategies going into tomorrow's trading session. Before we jump into our charts, though, don't forget the only place to watch the full-length version of our newsletter is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, if you're on our YouTube channel, don't forget there's a link in the description of the YouTube video. Follow that link. Come over here and join me on the blog. We'll watch the full-length version together here on the blog. While you're here, don't forget, grab your free pass in the upper left-hand corner. If you're not a member here at School of Trade, if you're not an advanced member here at School of Trade, I got a free pass for you to come out and test drive the trade room with me. Grab your free pass in the upper left-hand corner. Don't forget to register for the mailing list. I'll send you an email every evening when our nightly newsletter goes live. You don't want to miss that email every evening. Promise no spam. And of course, below the video tonight, you can download all the charts you see me using in tonight's video. Follow that link below the video to download all the charts so you are ready tomorrow. And of course, as I always remind you guys, you're going to learn more with me in 1 week on my trial than you will anywhere else on the web. Join the trial membership on the right-hand side of the website. And I'm always here to help you guys out. Don't be bashful. Don't be shy. Hit me up with the live support button on the right-hand side of the website. I am standing by to answer all of your questions here this evening. Hope you guys had a great week so far. A little bit slow to begin the day today. It was a little bit slow. I think a lot of traders are waiting on the news here, but boy, oh boy, were we rewarded for our patience at the end of the session today. Let's jump in, take a look at the schedule for tonight and tomorrow, and then, of course, we'll load up those charts and take a look a little bit deeper. First of all, tonight, Wednesday the 17th, in just a few hours, we're going to hear from Japan, and then, of course, a few hours from then, we'll hear from Australia. I don't expect those two news reports to get too much attention because we are coming out of a somewhat dovish, a relatively important FOMC meeting minutes that came out late this afternoon, well, 2 p.m. Eastern time today. So I think those Red Star news events are probably going to be overshadowed by what seems to be an FOMC announcement or FOMC meeting minutes this afternoon that pretty much kicked the can down the road here for any rate hikes, possibly into 2017. We shall see. But again, I don't think we're going to get much of movement off of these reports. I think it will all be based on what we just heard from Janet Yellen and co. From the Fed at 2 p.m. Eastern time this afternoon. Tomorrow, we got pretty much all the news weighted towards the beginning of the day tomorrow. If you're in London, 4:30 a.m., we're going to hear from retail sales from Great Britain, the ECB meeting minutes tomorrow morning at 7:30 a.m. And then, of course, it's a Thursday, so we have jobless claims. And then tomorrow, Thursday, we have the Philly Fed Business Outlook Survey, both of which are really, really powerful news reports. So, boy, coming out of tonight's session, markets are reacting heavily to news from today's session. And, of course, tomorrow, it's not going to get any lighter. We got retail sales from Great Britain, the ECB meeting minutes I would expect to be a soap opera, right? Of course, still post-Brexit. And, of course, the jobless claims and the Philly Fed. Jobless claims are usually pretty mild, but that Philly Fed report is always a market mover. So looking good here for tomorrow. Weighted towards the morning session. Nothing tomorrow evening, nothing tomorrow afternoon. We'll come back and talk more about the schedule for tomorrow evening in tomorrow night's newsletter. All right, guys, let's jump right in here. Got our schedule for tomorrow. And don't forget, we'll be in our chat room tomorrow morning for the London opening bell at 3 a.m. We'll be in the trade room tomorrow morning at 8 a.m. for the opening bell in the U.S. We'll look forward to seeing you guys there. Let's go crude, then we'll go S&P, gold, and we'll wrap it up with the euro. Crude is bullish in trying to complete the measured move target after the inventory report sent prices screaming higher today. The bulls have control, so they will be looking to buy the next pullback to the moving average. But one thing that concerns me Well, really two things. First of all, we started the day off completely in a range, and so most range breakouts fail. But we're also trading at the highs of that wedge target. We're trading at the completion of that wedge target, which tells me to expect a possible trap on the next pullback. And I'll be looking for a seller failure or the second attempt from the buyers, right, as they pull back to try to finish off that move back to the highs of that channel, right? The target is definitely to the high right now. The target is the high of the channel. The target is the measured move. The target is waiting overhead just above that $47 a barrel. But, again, the day started off inside of a range, and usually breakouts are going to fail. So I'll be looking for what I would call the second attempt from the buyers on this pullback. And, of course, the wedge target you can see there, 46.85 area there, right, is also going to act as resistance. No doubt about, though, the bulls have control, and no doubt about that we're likely going to see this market revisit that high again. The question is what this pullback looks like the next time it pulls back to the moving average. Sellers need to stay patient. The strength of this move higher will most likely give the buyers reason to buy every pullback until they get their target. The only real safe place for sellers at this point will be a successful breakout pullback below the battle zone at 46.26. Now, as you can see, the news sent price higher with that big green candle, right, back at 10:30 this morning. They held their pullback. You could almost look at this as a bull spike and wedge. Right, there's that bull spike and wedge, and of course, looky, there's your pullback into the correction zone, and then right back up again. So we got the target back to the high. Now look left, and if you're with us today, you saw this. There's nothing but a range, right? So every time it breaks the low, you buy it. Breaks the high, you sell it. We're in breakout mode right now, which tells me to expect under range day circumstances. Okay, I know there's news that's pushing this thing higher right now, but under your typical range day, though, this breakout will likely fail as well. Combine that with the wedge target overhead, and really what I'm looking for right now is really one of two things here. First of all, as we pull back, I'm a little bit hesitant to take that first pullback because of that wedge target. So I'm going to look for what we call in the trade room a second long off the low, which would be 1 and then 2, right? Look for that second attempt just because we have a little bit of concern as far as whether or not this thing's really going to have the guts it needs to finish off that drop. I might be wrong, but right now we got two big red flags telling us right now this first pullback probably not going to be the most reliable thing in the world. The next, of course, would be what I'd honestly rather see here. We got one of these on gold right now. Get below the moving average. Get the sellers to take the bait trying to sell this thing short, and then look for that to fail. We got a beautiful example of that right now on gold. And, of course, that would really be a little bit more reliable, right? Get it to pull back even further. In all reality, we have support here at the low of this channel. Don't be surprised, though, if this market really pulls back a little bit deeper. If it does pull back, this becomes an undershoot into an overshoot. So all of a sudden, we're looking right about here now, too. So it really all depends on what happens. Again, pull back, hold for the buyers, second attempt from the buyers, pulls back, goes below the moving average, sellers try, sellers fail, right? And then, of course, if we do get those sellers to be able to hold, this will really be all they'll be able to get right there, most likely. Breakout, pullback, and then back down. So as this goes lower, sellers definitely have a very small window there below that channel low. That's a really low reliability trade because you can assume you've got buyers who are just going to be scaling into this sucker as this thing pulls back right now. And then, of course, the buy would be there and there, right? Two buying opportunities. Seller failure, and then of course buying that pullback. If we pull all the way back into the battle zone at 46.40, we have to remember that this will be short term, of course, right? Not long term, but short term, it'll be a bear market. So that failure is not going to be as reliable. That buyer failure, this first one here, right? That won't be as reliable because it'll be again short term bear market. The one you really want to sink your teeth into will be that first pullback after it, right? After it does crack higher, right? So the aggressive traders can buy the failure. The of course, more conservative traders can wait for that pullback as it comes back lower. What we really don't want right now is for prices to go higher, right? If it just jumps higher here right now, well, then, we can't really do much. I'm not going to buy right now, that's for sure. Buying the high of day rarely makes you successful in the long run. So, 1 out of 10, 1 out of 13 trades, you buy the high, you'll be successful on it. So I don't want to see it go higher. If it does go higher, though, right, that will, of course, be the measured move target. If we do get the measured move target, then we're looking for that two-legged correction, and then back up we go again. Two-legged correction. Usually what happens is if it jumps higher like that, just jumps up like that, two-legged correction back below the moving average, look for that seller failure, right, and then back up again. What you don't want to do, though, is buy into the high of that channel or buy into that measured move. So, scenario 1, right, goes up, just, again, straight up here, doesn't pull back to the moving average, two-legged correction, then back up again, so we're not buying into that high. And, of course, look for that channel rotation if it does make it all the way back up. So we do find ourselves back to the high of that channel, right? Assuming we get through the measured move there, then, of course, we want to look for those buying opportunities down at the low of that channel. All right, it will be a situation where we're going to have to see how this thing pulls back. If it does just jump higher, it may just two-legged correction and then shoot right up again. So we'll be looking for that two-legged correction off the high because it's a measured move, and we oftentimes do see a double top, right, for those measured moves in real strong bull markets. Again, sellers, you're going to have a little window here below that trend line, but boy, it's a real small window. I don't think you're going to be able to really get any respect from these, right, from these buyers until you can get and stay below that battle zone. And, of course, that'll be where the target, of course, back down to that low at 45.84. Honestly, I think this market could go anywhere tomorrow. We're coming off of some big FOMC announcement news. A lot of this is fueled by inventories today. So, although news is definitely a fundamental factor in this, and the chart doesn't lie, it's very bullish, we have to be open-minded tomorrow because whenever we get a market completely fueled by news, we know that just as fast as it went up, it can come right back down. Trade what you see, not what you think tomorrow. And, of course, don't forget we'll be with all of our students tomorrow morning live in real time in our chat room and our trade room. How about some S&P? S&P's bullish and trying to finish rotation up to the highs of the channel after today's FOMC meeting minutes. Kind of kicked the proverbial rate hike can deeper into the end of the year. They're talking about December. I don't see them personally making any big changes before the election, unless of course Janet Yellen feels guilted into doing it. She did kind of commit to making multiple rate hikes this year. I've never seen a politician that had to keep their promises, but we shall see, right? We shall see. So my gut tells me we're not going to see a rate hike this year, but I can't trust my gut. Who knows, right? I've been wrong before. I'll be wrong again, I'm sure. But right now, though, from what we're hearing from the FOMC, it does sound like they are waiting until more information about raising rates. I'll let you make your own decision on that. Bottom line right now, though, is on the chart, which of course is what we're here to talk about tonight. Buyers have control and will be looking to buy pullbacks to the moving average. But the fact that the moving average is under the measured move, that will most likely pose a big challenge for the bulls, right? We don't want to buy into that measured move. The buyers will need to see continued strength pushing higher if they want to buy the pullback without slamming into that measured move, or they will need to wait for a two-legged correction back to prior support levels and then buy it up again, late morning in London tomorrow, early morning in the U.S. Sellers will have a small window of opportunity with a successful breakout pullback below the low of the channel, but they won't likely get much more than a scalp because strong trends like this will likely have buyers waiting below every swing low until we can get and stay below that battle zone low at 71.75 tomorrow. So ultimately right now for the bulls, this is one of those classic situations we always talk about. If you look left, you'll notice very strong end of the day today, but all they did was just get back to the high of day, And so when you look at it in the big picture like this, the whole day, you can kind of see, well, this isn't that impressive, right? You zoom back in, you go, whoa, right? The bulls are really strong right now. I think recency is always more important. Recency is always the most important. This market clearly caught a bid late in the morning thanks to the inventory report on crude oil, which of course